Palantir stock is absolutely ripping after a strong earnings report where they beat heavily on revenue. Welcome to the Fiscal Philosophy YouTube channel. I happen to own shares of Palantir Technologies. Just because I own it doesn't mean it's right for you. Also, keep in mind that my entry point on Palantir is at a much lower price than today's, so just because I think it was a good buy when I bought it back then, doesn't necessarily mean I would still be looking to add more shares at today's price. At the end of the day, I am a value investor, and so I think that valuation is important. Nonetheless, I do think it's worth taking a look at why Palantir may have rocketed up almost 35% on this latest earnings release. So the first thing the market sees is, of course, this beat on revenue. They're up over 19% compared to the prior year's comparable quarter, and this actually represents an acceleration compared to the last couple quarters. There was definitely a pattern of declining revenue growth in the last year and a half or so, and this latest revenue growth number represents potentially a new wave of growth acceleration. Of course, the market's going to be extremely enthusiastic about that because, growth acceleration might mean outsized gains. However, I do think that some people may be piling in and jumping the gun, maybe having some FOMO on this. I don't know if all of the price increase because of this revenue result is actually justified in reality if you look at the valuation overall and everything as a big picture. Now, you guys know me. I say the bottom line speaks loudest, which means what is their profitability? So their net income has been positive for the fifth quarter in a row now. This means that they can, for the first time, do a comparable quarter comparison to the prior year, and it's looking pretty good. 200% increase in net income compared to the comparable quarter the prior year. This is, of course, a result of the high gross margins in the SaaS type of industry that they are in. And I think that this number really excites the market because they're probably imagining what just a couple more years of this kind of net income growth could mean for their returns as shareholders, as very well they should. But at the same time, I think it's important to be a little bit more conservative and not just assume that it'll just be quarter after quarter, year after year of absolute perfection and absolute grand slams on the part of Palantir. If you only ever assume perfection, someday the music will stop and you will be caught without a chair to sit in. So then other positive thing going in Palantir's favor is their beautiful balance sheet. This is their net cash over debt, and they essentially have no debt to speak of, and they have billions of dollars worth of cash and equivalents. It would be extremely difficult for Palantir as a continuing business to go under during any kind of temporary issue because, frankly, they don't have any leverage. That means they don't have any interest rate exposure, and they don't have any excessive outstanding liabilities that would become a concern in the event that perhaps there was some kind of contraction in revenue. Basically, this buys them all kinds of time in the world to right the ship should there be something that comes up in the future. And it also puts them in excellent position to reward shareholders in the future. Speaking of rewarding shareholders, perhaps the one bone I have to pick with Palantir overall is the share dilution. It's not as bad as it could be. I've seen worse, but the fact is, this isn't something you want to see in the long run in a company that you invest in. The growing pie that is Palantir's stock is great and everything, but it means less to me as a shareholder if my slice continues to shrink because of this share dilution. So that sort of tempers my optimism a little bit on what my stake might be worth going forward. And when it comes to the analyst forecasts, I feel pretty divorced from these numbers. So Certainly it does seem like the high of $30 could happen based on the enthusiasm we're seeing after this good earnings report. The low of $5, let's just be honest, that's pretty absurd. I don't think that their intrinsic value is anywhere near that low. The 15 is, maybe somewhere within the realm of reason. However, my gut on this is that I would still put its actual value somewhere in the high single digits. My sense is that if this dipped, to $10 or below, I might be interested in adding to my current position, which my basis is just over $6. I do think that Palantir's value has grown some in the last year or so, but I don't think it's necessarily doubled or tripled. A lot of this recent price surge is very likely enthusiasm around AI. And I'll acknowledge AI technology definitely is something to be excited about to a degree. And I certainly think that it has a use case and a place at the table. I don't think AI is going away, and I think it will, at various points, enhance our lives in different ways, some of which we can imagine and some of which we haven't even thought of yet. But what that doesn't mean is that every company that has an AI component will necessarily be a 10 bagger, 20 bagger, 100 bagger, whatever you want to call it. People had a similar thought process back when the internet was new, that if you just bought anything to do with the internet, you were basically guaranteed to make millions of dollars. That just isn't usually how these things play out. So I ran a DCF quickly after recording the last voiceover and assumed that they would achieve 2025's analyst estimates for earnings per share. I applied a 12.5% discount rate and gave them credit for a 10-year CAGR of 14% EPS growth, and then dropping to 7% for the subsequent 10 years. And by the way, they could easily knock these numbers out of the park. This is just a sense of what I think is a pretty realistic amount that they could do over that period of time. It's pretty hard to predict things accurately over a 10-year period. But something interesting happens if I lower the discount rate to 10%. Suddenly, the fair value becomes just over $10. And I did mention before that I get the sense that if this price dipped to $10-ish or slightly below, that probably it's good to add more, at least from my perspective. So I do think I would very likely want to start to add more if it ever gets into this, call it $8.50 to $10 range. But at the moment, I'm certainly not planning to sell just because they're, about twice this high. That's because I think they do have a potential to blow these numbers out of the water and actually justify their current price, potentially. But I think it's more likely that it's something a little bit more reasonable, which is why I would only add more if it dropped back into what I think is basically value zone for them. Overall, I do like Palantir a lot, and if you feel the same, let me know in the comments below if you have any Palantir and what your cost basis is, what you think its actual fair value is. Make sure you subscribe to the channel if you like these kind of videos and want to see more videos on Palantir. Also, make sure you hit the like button to push me in the algo. Follow me on Discord, link in the description. Help me get my first 100 followers on Twitter, link in the description of that as well. Consider becoming a member and watching me every Saturday, 8 p.m., Cashflow Kings Live. Take it easy, everyone.